My name is Terry Kipley. I'm president and CEO of CPDA. We're the Council of Producers and Distributors of Agri-Technology. So CPDA was founded 40 years ago really as a home for the post-patent community to have a seat at the table, a level playing field in Washington, D.C. So to my left, we have a distinguished panel that's going to help us share some insights about U.S. procurement. And so what we'll do is let's just go down the hall here or down the row and your name and why you're a great American and a little bit about your company. So first up, Casey, go ahead.
Hey, good morning, everybody. My name is Casey Daniel. I'm the director for Nutrien Ag Solutions for strategy and sourcing. And Nutrien is a publicly traded input company. We have about 1,300 locations in the U.S. and globally we have about 12,000 employees. So we're in Australia, Canada, a few other countries. And yeah, glad to be here. Thanks.
All right, Craig.
Good morning. Good morning, everyone.
Maybe hold the mic a little bit closer.
Good morning, everyone.
Beautiful.
I'm Craig White. So I work for Simplot on the Invicta side, which is our proprietary business. So I'm the director of supplier strategy and manufacturing. Been in retail distribution for about 29 years. So Simplot, we have 225 locations across 38 states and 2 provinces and about 2,500 employees.
Good morning. I'm Stace Doonan with Helena Agri-Enterprises. I'm the director of Omni Brands, which is our generic platform for the company. We also manage the generic suppliers. I've got a counterpart that manages the brand space. Helena operates in 47 states with over 600 locations, full service to the grower, but we do operate in all 50. And I've been with Helena since 98, so pushing on 30 years in the business.
Good morning. I'm Jeff Pritchard, the CEO of WestLink Ag Group, based out of Boise, Idaho. Share Simplot's location as well. We're a independent buying group with about 50 members across the United States, member companies. They're all independent retailers. The predominant part of the country that we cover is west of the Rockies, California, the PNW, but we have 50 members east of the Rockies as well. About 400 ship to locations in that regard. And we also don't just deal in the procurement of agrochemicals. We also manage fertilizer, seed, other programs in fleet and insurance and things like that for our member companies. We've been in business since January 2000.
All right, so let's get started here. So let me give you a couple of opening remarks to perhaps set the stage, and we'll have a discussion. So the objective of today's discussion is to exchange ideas and practical experiences around the most challenging issues that face the crop protection industry, and that is how does procurement organizations, how are they making sourcing and supply chain decisions in an increasingly uncertain global environment? It's a big, big challenge. So procurement has become far more than just negotiating price. As leaders, you must balance cost, supply assurance, regulatory compliance, geopolitical risk, supplier diversification, inventory management, and long-term strategic partnerships, all at the same time, assuring that the products are available when the growers need them. So it's kind of daunting when you read that, right? How do we do all this?
I better get some help.
So let's talk a little bit about the market just to frame this thing up. So we have the folks on stage, some people say represent somewhere between 30 and 40% of total U.S. distribution of the market. So what's the marketplace? Some people say that the U.S. crop protection market is right around, say, $15 billion. You take off, say, $1.5 billion, maybe $2 billion for the kind of the T&O, turf and ornamental market. So let's just say, for discussion's sake, that our U.S. crop protection market is right around $13 billion. And talking to a lot of folks here, what percentage of that is, say, post-patent? Some people say somewhere around this 80%. As we look forward, the patent cliff that's facing the industry, do we think in 5 years or 7 years that post-patent market of that $13 billion could be 90 to 90% post-patent? So now what we want to talk about is, as a context, rapidly changing markets, margin structures that we all have been reliant upon to help fund in full service providers at the grower level. What does that impact and how do we make decisions going forward? So first of all, here's our big broad question, and each of you, let's just have a talk. So given all this, what procurement strategies are you using today to manage the China supply chain risk? And then how are those strategies evolving in 2026 and 2027? Let's just kind of talk about how are you viewing you're running your business today, and let's just go down the line.
So, you know, obviously China is very important. They have the vast majority of the supply of off-patent chemicals in the world. So we're not trying to disengage from China. We're just trying to have a more diversified approach at Nutrien, working not only with partners established in the U.S., but also India, and trying to really get better visibility into supply chain, not only the raws, but, you know, the intermediates, and see the type of partners that we're dealing with. Are they financially secure? Are they abiding by environmental compliance? What's their safety profile look like? And just trying to be closer to the partners that we're working with.
All right. Greg, how are you viewing this at your shop?
Yeah, it's easy to go first because you get the easy ones there, Casey. So, but yeah, to kind of a little echo what Casey was saying. I mean, it's really figuring out the diversification, the dual sourcing, getting back integrated closer to the source. Again, working with partners from China, working with partners in the U.S., also India. But then also, managing, the current environment where you are with tariffs right now, right? And that's a big part of, the sourcing strategy that we have to have as large, retail distribution in the U.S. to manage that dynamic that we're faced with today.
Yeah, no, very well said by my counterparts here to my right. Look, in Helena, we've got two segments of business. We've got a proprietary segment of the business, which is differentiated, and there isn't an alternative in the marketplace. So that is a priority when we're focused on our sourcing. So we do get very diversified on that, whether that's, having three options from the basic to then whether it's European, Chinese, or Indian options on tech sourcing. And then what I'm responsible for on the Omni brand space, that is generic. We've got partners in the U.S. that we certainly align with from a supplier standpoint. And, focusing, I'll say, on the sourcing from the TGAI, it's getting boots on the ground in those areas, really visiting the manufacturers. I think to echo previous statements, I mean, you're focused on safety, quality, but you also want to know how back integrated they are. Are you really aligned with low-cost producers, the quality's there, and the consistency? And that's the one thing we can provide is that consistency for our suppliers. And that's worked out pretty well for us over the course of the last probably 10 to 15 years.
I really don't have much to add after being fourth here because I echo everything that you've already heard. So I'll shift the gear a little bit. When Terry talks about a $15 billion market, maybe a couple of years ago, 10 years ago, it was a $17 billion market. And those $2 billion, where are those margins going to come back for retail? And I think with some of the cliffs that we're facing over the next 5 years, we could see further devaluation in the market. And where are those margins going to be displaced? So a lot of times doing everything these guys have already said, we're spending time with these suppliers sharing what we have to deal with at the retail level so that you understand the market you're coming into, because we're in this business together. Whether you're a Chinese company, a US-based company, an Indian-based company, at the end user level, we've got a very difficult farm economy today that we're dealing with, and we all have to respect that and understand that. And it's shifting some major procurement decisions going forward, not just in ag chem, but fertilizer, seed, equipment, et cetera.
So Jeff, let's follow up on that. So you touched on something, relationships. So can you put a little more meat on the bone? What are the capabilities for these supplier relationships that are going to be most critical going forward to stay competitive? You're making decisions of, you're going to have to make some hard decisions. What are you looking for when you say, can I stay with this relationship long term? What does that look like? How are you making that decision?
I get to go first this time, so we're going to go the other way.
We're going to go the other way now because you coasted on the first couple of answers. So now you come back and help us out here.
Well, that's fair. we're all about agronomy in my organization.
Closer to Mike.
We're all about agronomy in our organization. We spend a lot of time looking at the acre and how is the acre playing into the decisions of which suppliers we're working with. So if we have suppliers that are willing to work with us in that context and focus on the talent that we have in our organization and how they agronomically deal with their farmers on an acre per acre basis, we're going to have a long-term relationship with that supplier. A lot of times the discussion's all about price, 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 and price, but when you're looking at the context of how many generic alternatives exist by molecule, it's quite impressive. I could pick on glufosinate because that's a very popular product. In my little organization, we probably have 20, 21 glufosinate suppliers. So that does become a price discussion. But if you're talking about some of these products that are going off patent now, and we're getting more engaged as a primarily generic-focused retailer, then we're going to look at companies that can share our passion for agronomy.
So, Stace, why don't you take on that? As you think about this, how are you making that decision of who you're going to partner with, given how quickly things are changing in the marketplace with this patent cliff coming? What do you look for?
Yeah, look, I mean, we're blessed to be in this industry. We are surrounded by incredible people, whether it's international or certainly domestic. And it is very relationship driven because I think Jeff kind of touched on it, we've got to provide that agronomic advice to the grower. And that is that starts there. And then our suppliers certainly carry that through. And in this day and age, it is very daunting, the amount of access that's available, the overcapacity that's present. So aligning with, I would say, U.S.-based generic suppliers is critical. Who's a manufacturer, who is not, who is back integrated there, who can provide some cost positions for you, terms, availability. We are probably at a crossroads where there are so many options, you will have to probably pick and choose. We're getting to that level here in the very near future.
So, Craig, same thing, but can you dial down a little bit? Let's talk about supplier resiliency and transparency. So as you're evaluating relationships, what goes to your mind? Is this person going to be around for long haul? Resiliency. What do you look for that supplier in that relationship? Resiliency.
Yeah, so I mean, it kind of gets back into what was discussed up here, right? It's who's a true producer, who's a true manufacturer, right? Who's got assets that are going to be around, right? That can supply the market. That's a big key too, right? Is understanding the differences on who's got the capacity and who can produce, right? And like Stace said, with the U.S. generic companies that we partner with today, who's got the production in the U.S., right, that can align. And I think the landscape's also changing, right? We've been talking about the generic chemistry. You've got more stuff coming off patent. 28's a big year. It's going to change a lot of the agronomics as we go forward too, as that cost comes down. So we also look for who's got the capabilities of looking at some new mixtures or something different because it's going to go across more acres from a price standpoint. So who's also got some, development capabilities as well as what we look for.
Yeah, so echo a lot of the things that have already been set up here, but specifically with how do we look at picking Chinese suppliers? And, I kind of touched on that a little bit earlier, but it's got to come down to, obviously price is a part of it, but we need the reliability. If we place a PO and they say it's going to be on the water, October 1st, I mean, we need it on the water October 1st. We miss a market. 5 minutes. We miss a market, and that's a bad day for our customers. It's a bad day for our company. And then obviously as we pick partners, there's a lot of Chinese companies that are also bringing their own products to the U.S. and that's good. Good for them. That's part of their strategy. But when we're picking suppliers, we want to talk through that with them and say, hey, if you're going to do that and you're going to partner with us, you need to steward the market, because we don't want to be a part of further devaluation.
So we got the sun. We got about 3 minutes left. So one thing that has been incredibly difficult making these decisions is dealing with the tariffs. We were talking last night. sometimes it feels like if you make the decision too quickly, you could get hurt. But if you make the decision too slowly, you can get hurt. What types of strategies have you used to try to manage through this whipsaw around tariffs? Any tips that you've shared? Are you using free trade zones? Are you trying to be creative with any type of relationships from a supply chain? Any tips as we wind down our time here?
Yeah, just quickly, I mean, we haven't gotten into the free trade zone, bonded warehouse part of the tariff scenario yet. We're still looking at that and trying to make that pencil because there's a lot more to it. But from a tariff standpoint, you know, it's been such a whipsaw that it's kind of hard to make, you know, clear, easy decisions. But we've worked with our suppliers, not only in the U.S., but in other countries to help manage that. You know, they've shouldered some of that burden. We've shouldered some of that burden. And at the end of the day, you try to do your best not to get completely upside down.
Yeah, I think at the end of the day, right, it's all about the timing of the market, right? So you can delay your decision, but you got to make sure you have product in time for the market. So kind of like what Casey was saying on the last question, right? If it leaves October 1st, it needs to leave October 1st. So we spend a lot of time really looking and figuring out when we absolutely need the product, right? So we have the capability of delaying and utilizing some inventory, some carryover inventory, and making the decision, right? If it's not a great tariff situation, but you get to that point where you got to have product for the grower, and you've got to make that decision. So, I mean, you play that game on timing and inventory, and just, you know, it's the uncertainty of when you're going to know. But at some point, you have to make a decision to make sure that you have product in. So that's the only thing I can really add to that is just playing that timing game.
Yeah, and real quickly, we're very fortunate at Helena where we've got a subsidiary, Helena Industries, that does manufacturing. They do also have a free trade zone. So we can utilize that, and there's certainly windows of opportunity. Sometimes if you look back just in July, we had the 122s coming off and the new 301 labor's coming on the 24th to the 28th. If you did have material warehoused, you could exit during that 4-day window and save. But in all reality, I think we spend a lot of time talking about tariffs, but when we view it, we look at removing the uncertainty. So if you go back when Trump last year was expressing some pretty lavish tariff percentages, and then they went on a pause, those are opportunities. You know, you know that that's pause. You can play in that space. You're maybe bringing it in sooner than you'd like, but that's where terms come into play. So we just try to remove the uncertainty when it does come to the tariff angle.
Very good point, Stacey. I'd shift gears a little bit on this and say that I think that in our case, we're buying a lot closer to the actual application of the products and not doing a lot of pre-buying because of the uncertainty. You know, this thing keeps flip-flopping back and forth. And at the base of our industry, we've got an end user, the farmer, that's buying all of his products retail and selling his product wholesale. He has no control really over yield. He puts as much into it as he can to minimize the yield losses, but Mother Nature impacts a lot of that as well. He has no control over the price that he gets for his commodity. And the only thing that he does have control of is his input cost. And he's delaying that decision up until the last moment because of his uncertainty. And that's causing us to delay it. Fortunately for us this year, I think there was enough inventory in the United States, the tariff impact wasn't felt. I think that going forward, we're going to deal with this issue in a much, much bigger way.
Folks, we are out of time. Again, I want to thank Renee Targos and Meister Media. You know, I've been coming to this meeting for 19 years, and we had a senior executive panel, CPDA, a few years ago, and one of the executives was saying that, you know, at the end of the day, market intel is really the key to all of our businesses. And I think what we were being able to touch here and what you guys have all shared is that understanding what is going on and talking to as many people as possible, gathering that valuable market intel in this period of uncertainty is really the only thing we can do to try to make the right business call. So we appreciate the opportunity to share these insights with all of you. We welcome more conversation when we step off the stage. So again, thank you, Renee.